Hello, it's Paul Scott here on Wednesday the 24th of June. It's 9:15 in the evening, quite a late Small Cap Value Report Extra today. I'm not recording this video to crow about the investigation and suspension of Quindell shares. I'm very conscious of the fact that I've been working inefficiently this week because I've been a bit run down with a bug that I picked up on Sunday. So my written reports, I've missed a lot of stocks that I would otherwise have covered. So I've got a long list here of about a dozen stocks that I want to mention very briefly. Before I do that, I just want to show you a quick feature on these videos. This is the one from the 18th of June that we're looking at on screen. Now, if you go down here to where it says Show More, below the video, you've got links where you can jump to my comments on particular companies. So after I've published every video, I make a manual note of the start point in minutes and seconds of my comments on an individual company. So if you don't have time to listen to the whole thing, that's a quick shortcut. Okay, cracking on. Tick off those two things. Now, I hope I haven't sort of created an end by showing one of my own videos in a video. I hope I haven't created an endless loop that will break the internet. So let's hope not. I am imbibing a nice glass of Cava here. My favourite Cava is called Codorniu. I don't know if that's the correct pronunciation. I worked in a vintners in Wimborne in 1988, one of my first ever jobs. No, I think it was 86. Called David Byrne Vintners, and the lady who selected all the wines there, I asked her what's the best affordable champagne that's not a champagne, because obviously as a student my budget didn't stretch to champagne. She said Codorniu is the next best thing. So out of curiosity, I went to see if David Byrne's Vintners still exists, and sure enough they come up here on a Google search. So I clicked on it, but unfortunately their website's been hacked by the Iran cybersecurity group. So there we go. They need to get that fixed pretty damn quick if they want to continue with their internet sales, I would suggest. Right, I'm waffling now, let's crack on. Daniel Stewart, I've got to mention this. This is down 34% today. Now, a completely spurious rise here from 0.21 pence up to a peak of something like 3.8 pence. Ridiculous move. The company even put out a statement saying there was no reason for it. I did a severe warning about this in my report of the 19th of June here, where I set out exactly the facts that this was a totally spurious rise. And of course, the Rob Terry now under investigation by the FCA and potentially, rumour has it, the Serious Fraud Office. You might end up in prison. So having him on your list of major shareholders that's going to radically transform your business isn't looking quite so clever for Daniel Stewart now. I mean, Daniel Stewart as a broker are total spivs, and Rob Terry is a total spiv. So quite frankly, they're a match made in hell. So good riddance to both of them, hopefully in due course. Xeros. Now, I'm coming to the view this is increasingly at the moment, it's not a stock picker's market, it's a trader's market. Now, this stock was talked up a lot by Naked Trader, and there have been several tremendous spikes in price. It makes this revolutionary bead-based washing machines, commercial washing machines. It does seem to have big commercial trials underway. It does look interesting, but 167 million market cap for something that's effectively pretty much a zero turnover business. Heavily loss-making, 10 million odd. And look at the trend of losses there on the graph that pops up when you hover over it. I think it's got enough cash for the time being, but it's a very, very racy valuation that for something that's pretty blue sky still. And so you get these gigantic moves in price, up there and down here. Now, I did look at this the other day and saw it come up on my sort of persistent fallers list. When it got to about £2.20, do you know what? I nearly bought some. Purely as for a bounce, and I'm kicking myself for not having done that, because it's bounced literally in just a few days to 271p. So this is a trader's market. Nobody really knows how to value shares like this. You play those stocks really at your peril, I think. If I am going to do something more speculative, I like there to be a clear route to profitability. So one of my favourite slightly blue sky stocks, but well, no, I wouldn't say blue sky. I'd say more sort of early stage growth stocks is Accsys Technologies. I mentioned this one before. It is speculative, so it's not for everyone. It's not a value share by any stretch of the imagination, but you could call it a GARP share, I think. The forward PE is 155, but that's missing the picture. I took their recent accounts pack down to the beach with me today to do my lunchtime reading, and one of the joys of living in in Hove during the summer, I'm only 2 blocks away from the beach, so I just pull together all my reading matter and take my lunch down there and have a good read in the sunshine. Now, the chart pattern, so 67 million market cap. It's not profitable at the moment, but the most recent results show that it's kind of almost at EBITDA break-even in H2 for the year just gone. It's targeting cash flow profitability in the current year, ending March 2016. That's the type of speculative stock I like, where the heavy lifting's already been done. The share capital that's been put into the company is 2 or 3 times the current market cap, so there's a lot of sunk investment over many years in this wood product, which is now being manufactured in scale, 40,000 cubic meters a year from the pilot plant, but they got joint ventures with 2 major chemicals companies to expand and for them to open new factories. So there's a lot of things I like about this. Very, very interesting chart pattern in recent days. If you look at the oh, sorry, that's the wrong thing. If you look at the no, I can't find it. If you look at the chart, oh hell, what am I doing? Here we are. If you look at the chart, now there's been a very, very interesting series of spikes up and down in the last few days. So if you look at this is the 2-year chart, which I have by default on Stockopedia. Now look at this huge spike down. That was on the day of the results. Or I think these bars are over a 2-year period of several days, so let's narrow it into, say, 6 months to get a daily snapshot. And the comparison line I always use by default is the small cap listed shares index as a comparator. Now look on results day what happened. It opened up, so the top of the red candlestick is the opening price, the bottom of the candlestick is the closing price, but the extended bar shows the intraday movement. Look, it spiked right down, and on reasonable volume, 700,000 or 800,000 shares traded, came all the way back up again. Now that's usually a fairly bullish sign. I don't know the technical terms for it or whatever. The next day there was another wobble on even higher volume, so it looks like somebody, for reasons unknown, was dumping and was in a hurry to get out. But look, buyers have steamed in each time. Now that to me is bullish. That's saying around this level or below, 68 people and below, that's when buyers really pile in and overwhelm sellers. So that tells me you've got probably a floor around 68p now on that stock. And then, funnily enough, I think it was yesterday, you had a sudden shooting spike up. And I noticed that a big trade went through that caused that. 200,000 or 300,000 shares were traded, and it seems somebody just paid 10% higher than the price to get the stock. And it's drifted off a little bit since then. But I bought some more at 75p today. I think this one's potentially a very, very interesting stock. They're saying that the market size is up to is potentially 60 times the level of their current capacity. Now obviously that's not going to happen overnight. They've also put through a 5% price rise last year. So if you've got a product that has pricing power and where you can't make enough of it, that is a very, very nice set of circumstances in my view. On a less positive note, Daniel Stewart I put onto my Bargepole list, by the way, on the 19th of June, and look, it's already 38% down. So the Bargepole list is stocks where I think there's something really fundamentally wrong with the company. I'm going to have another look at Concha. I mean, that one's ridiculous valuation again. That's actually gone up since I put it on there. And it's just a cash shell. 104 million market cap. Madness. This list does seem to catch a lot of companies where there's something fundamentally wrong. They don't all go down, because high risk shares can shoot up, of course, if something goes right. But I wish I had more time to keep the Bargepole list up to date. But I just add stocks to it when I remember, basically. NHL seems to have relisted. Now this, I just had a quick look at this today, and it's relisted at a huge well, quite a big premium. It's readmission. It seems to have bought a food company in Europe. I might have a look at that when I've got more time. Benchmark put out results. I couldn't really make head and a tail of them, I'm afraid. I've come to the view with... Sorry, I keep knocking the microphone. Benchmark, I just can't make head and a tail of this company. I think they've made a fundamental mistake in pat together a profitable, or a couple of profitable businesses with some blue sky stuff, so that you have to dissemble the group to work out what the constituent parts are doing in order to value it. I just find it too complicated to value. I really do. I don't know how to assess the prospects of the various businesses. You see, EBITDA fell for the 6 months to only 1.2 million for the 6 months. It's just too complicated to value, I think. And I like simple businesses where I don't have any trouble valuing them. The other thing with Benchmark I didn't like is in that you see 154 million market cap. It's not inexpensive. And look, the forward P is 215. I mean, you unless you're a specialist in taking these things apart and valuing the sum of the parts, I mean, I just can't be bothered. I want to just invest in simple companies where I know what the profit is and I can value it on a multiple of that. So it's a Benchmark. It's not for me. Also, they've got generic competition against their core product, and I never like that as a situation. Companies always say, "Oh, well, the decline is happening slower than we thought," and all this sort of thing. But I don't want to be investing in companies with a declining product. I'd rather invest in the challenger products. Clean Air Power, I think, is on its last legs here. There was a statement yesterday making it very clear that they're out of cash again. I really hope they do manage to get refinancing, because it's a very interesting product that allows diesel engines to be converted to run on a hybrid basis between diesel and natural gas, which obviously would make them a lot cleaner, particularly around town. So I hope they survive, but it's looking very grim, I'm afraid. Tangent results, they're just out of cash. Tangent results I had a quick look at, I thought were very poor. No, they weren't very poor. They were just really more of the same. This is a company that's just struggling. They've said that they've got one particular... They traded in line for the first quarter, but rate of the year forecast has been lowered, so it's a full year miss that they expect. The balance sheet's okay, but I can't see anything of interest there, I'm afraid. It's a printing, it does sort of online printing, and that sector's just too competitive. Tandem, similar name, the bicycles company, they made some comments about the bicycle market being tough. I had to think about that, and I suppose there's been a big craze to do cycling in recent years, but you buy a bike and that's you sorted for 10 years if you buy a decent one. Come on. Is it loading up? No, it's not. Tandem. You buy your bike, and then you don't need to buy another one. I mean, okay, there are accessories sales and so on. So I'm wondering if maybe the cycling sort of boom or mini boom. Having said that, they say revenue is 12% ahead. Where did I read that they had a mixed performance? I'm sure they said market conditions were tough. Cautiously optimistic about the outlook for the remainder of the year. Oh, here we are. The independent cycle businesses remain under pressure in difficult market conditions. Yeah, there you are. So I'm not going to look at that. I had a quick look at BILB. I've not looked at this one before. A reader asked me to look at it. I think it looks quite interesting. So this one is worth a further look. They seem to install boilers for housing associations. These final results issued yesterday I thought looked very good. So that one is worth a look, definitely. Look at that, operating profit more than doubled. It's a recent float. Recent floats tend to do well initially, and then I think they're often set up to do well initially, and then a profit warning comes a year later. IDH results were disappointing, but it's got a very strong balance sheet, so that's worth a look. Possible turnaround. HAYT, that's the motors company. I had a quick look at their results as well. Oh, come on. Too bloody slow. Here we are. HAYT results. Good turnaround there. Damn, I've run out of time. 50 minutes is up. Speak soon. Bye.